Today we are going to take a look at the dollar index as a standalone, and we're also going to take a look at what Jerome Powell has mentioned yesterday and why we can expect the dollar index to further increase in value as well. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, yesterday Powell came out, and these are some key points that we're going to speak about. We're going to look at how the CME tool, Fed tool, took a massive spike after that. We're going to look at the current interest rate, how it impacted the dollar index. And we're going to look at the problem and how the quarter basis point has done nothing to to help the people in the US spend less money, because they're like, you know what, it's fine, we don't care about higher interest rates. But in any case, let's jump straight into it. First things we need to understand is how does interest rate impact the US dollar. Now, firstly, higher interest rate means higher investment. So not higher investment, but it means that investors are more likely to invest in the US dollar based off the higher interest rate, or the higher the interest rates. To give you an indication, from April, which is where we are now, this is the month of April, right? Here we had a quarter basis point hike, which is exactly what we got this month, and that is only a quarter basis point, and you can see exactly how the market reacted to a quarter basis point. Now, keeping that in mind, this month, as we can see over here, the article reads that Powell says taming inflation is absolutely essential and a 50 basis point hike is possible for May. This is what a quarter basis point hike looks like, how it attracted investors. Now, I want you to think about how much this is going to increase when they announce a 50 basis point hike when it comes to the 4th of May once again. Now, if you are sitting there thinking, okay, but how can we trade this? That's quite simple, ladies and gentlemen. Okay, if you go and look at things as the Euro USD, AUD USD, every currency trading against the dollar, you can expect it to get weaker, right? Every currency trading against the dollar, you can expect to get weaker. Now, every currency trading with the dollar, you can, or where the dollar trade against it, you can expect that currency to get stronger. Okay, let me just fix this, because there we go. So you can expect this to increase in value, and you can expect anything like that to decrease in value. Now, let's go back to what Powell had spoken about. Now, Powell said yesterday, on Thursday, he said that the central bank is committed to raising interest rates expeditiously to bring down inflation. Now, this is inflation, ladies and gentlemen. The inflation is at its highest peak since 41 years ago. Now, the funniest thing about this is that when the Federal Reserve came in last month and they said, you know what, we're going to hike interest rate with a quarter basis point, you'd have expected for inflation to come down. But clearly we went from a 7.9 to an 8.5, which tells me that US citizens does not really care about inflation, interest rates. So because interest rates are there to tackle inflation, the only way to bring down these numbers over here, the only way to bring these numbers down is to take these numbers up. You have to increase interest rates to bring inflation down. Now, if you look at these CPI numbers, for instance, and had only increased even after the market had hiked interest rates, this had continued to increase in value. Now, because it's now sitting at an all-time high, we're probably going to see a 9 happen, might go to a 9. We are now starting to see the Federal Reserve becoming more aggressive. Now, that's why it says here the central bank is committed to do whatever it is going to do to bring down inflation, and that is why we can expect a 50 basis point hike possible for May. Now, this is an investment sentiment tool. We can see as of yesterday, target rate probabilities for May, which is the 4th of May, which is when the Federal Reserve is going to hike interest rate. That 50 basis point hike is now 95.7% likely to happen as of the data we received from Powell yesterday. Sorry about that. Now, if we go and we continue this, that could mean an interest hike of 50 basis point in May as prices rise at their fastest pace in more than 40 years. which is exactly what I just said now. Inflation is at an all-time high, so we've got that problem. But yet, as the Federal Reserve are increasing interest rates to encourage consumers to spend less, what do? They just keep spending more. That tells us that these people actually have money, so they don't actually have any problems, but they are going to get to a point where they are going to stop spending money, and that's ultimately going to bring the consumer spendings down, which is ultimately going to bring the CPI down as well. But what that means is that you can expect the US dollar to increase in strength as the interest rate keeps hiking, and you can expect the stock market to deflate in value because stock companies make money of revenue that's being purchased through CPI data, and if consumers are not spending, these companies are not making money, meaning that investors will take out their funds there and put it in the dollar. Now, the last point over here reads, it's absolutely essential to restore price stability, he added. Now, this is the funniest thing, because why? This has been going on for quite some time, and he's been saying this over and over and over and over and over again, but nothing had happened ever since. So it says here that Federal Reserve Chairman Jerome Powell affirmed the central bank's determination to bring down inflation and said Thursday that aggressive rate hikes are possible as soon as next month. Now, the thing is, with these numbers continuing to increase and the Federal Reserve keep wanting to hike interest rates at a quarter basis point, we are never going to see the inflation drop unless the Bank of America or the central bank start hiking these rates more aggressively. Then we'll start seeing these numbers go down, and as they hike these rates aggressively, you can then expect the dollar index to increase in value there as well. Now, if you ask me, there is a high possibility that the dollar index is going to test at least that 104 mark over there going into going into this year. And if the inflation numbers keeps on increasing, we can definitely expect the CPI numbers to if the CPI numbers continues to increase, you can expect the Federal Reserve to continue increasing the interest rates, which is ultimately going to keep increasing the US dollar, the value for the US dollar, which is ultimately going to decrease the value for the stock market. That's why I said that the stock market is gonna fall. It's gonna drop. If you think that drop for yesterday was bad, the market only dropped because Powell hinted a quarter basis point hike. And that is what happens when you are fearful. The market only dropped because Powell hinted. Now, what do you think is gonna happen when it actually takes place? He also said there are more job openings in the US than unemployed people. Now, what that also told us was that they were probably likely to have created more jobs, and that we could expect a positive outcome for the NFP based off what he's saying. He said that there are more job openings in the US than unemployed people. Powell also said that we've seen some tightening in the financial conditions. We're not counting on help from supply side. He also said the events in Ukraine have possibility of causing more fragmentation. Now, it really doesn't matter how Powell puts this. The only way that they're going to bring the inflation down is to hike interest rates, and by hiking interest rates, they're going to pump up the dollar, and by pumping up the dollar, they're going to send the stock market down to the ground. Now. Yes, we could go there. Boom. Right? We can go there. There's no problem with going there, because if the US citizens doesn't stop spending money, we can potentially go there once again. Now, you should be looking at the increase in the dollar index for the long term. That means you sell Euro USD at a good price, you sell GBP USD at a good price, and that is basically what you want to do. Now, let's be reactive and not predictive. We have to learn to adapt to the ever-changing market environment there as well. Now, that is it from my side, ladies and gentlemen. I want to say thank you for your time, and as always, cheers for years.